Today is Wednesday, June 8th, and it's currently 11:39 a.m. Eastern Time. This is the daily chart for the Select Spider Trust Financial ETF, ticker symbol XLF. And as of the time of this recording, price is trading at $34.93. And since trading started this morning, price is down 31 cents. And this is the current daily candlestick right here, this red candlestick right here. And from this dashboard, what I'm showing is that I've identified local resistance of $36.09 and local support of $32.56. What I'm also showing here is that this red hash line represents the upcoming June 17th expiration Friday for monthly option contracts. And this gray box, it's something that I just added as a visual representation as to where I need price to be before June 17th. So essentially, I do have a bearish sentiment on this asset, and I'm anticipating that price will be at or below $34.50 on or before June 17th. And the rationale for that position is that we can see that price has been falling towards the downside, right? So since April 21st, price has just been working its way towards the downside and had 2 or 3 instances where price came close to the local support. And then here we have a bounce occurring on May 20th, right? So there was a bounce for a potential retest of resistance. Some can argue that it didn't make it. Some would say that it did. I'm in the camp of price not reaching because it really didn't pierce the resistance of 36.09. But subsequent to May 27th, price has just been going sideways. And with expiration Friday about 2 weeks out, I'm anticipating this trend would continue towards the downside. So essentially, I'm anticipating that price will be falling, possibly to fill this gap right here. It's not a large gap, but on May 25th, price closed at $34.19. And then the following trading day, it opened about 40 cents higher at $34.56. So typically the market is efficient in that one day, sometime in the future. I mean, no one really knows when it's going to happen, but the market will reverse itself, regardless up or down, to eventually fill a gap, right? So could this be the start for price to pull back to fill this gap and then run right back up to retest 36.10? It's possible. It's possible, but this is a factor, but it's not really a significant factor that's making a large sway into my bearish position. What actually convinced me, from my perspective, to take a short position is that using this candlestick right down here from May 19th, because this candlestick has a lower low, not including the wick. I'm just focused on the body of this candlestick. So we can see that the body low is 32.74, right? And the low of this body is 32.91. So I'm using this candlestick as my anchor point for a regression channel, which is right here, regression channel. And I can't swing this channel any lower. Like my cursor is right down here, the bottom right quadrant, and I can't scroll any further. So this is the algorithm, I guess, for Thinkorswim to say that this is the current market structure. So the red band is acting as resistance, the blue band is acting as support. This gray band that's running down the center of this channel is acting both support and resistance, right? So where price is right now, it's really hugging against this support level. And I'm anticipating it's going to break out of it and start sliding towards the downside. I'm not going to say that it's going to come all the way down to 32.56, but it may come down here to as low of 30. $34, possibly to fill the gap, and then maybe run up to retest resistance or continue fading towards 32.56. But I'm looking at it from a short-term perspective heading into June 17th. So I'm anticipating that price will be at or below $34, right? So I need price to fall outside of this gray box. And that's it. That's the rationale for this position. And what I'm referring to is that if I click on the trade tab, here's the option chain. And I do have a position involving the June 17th expiration date. And right down here are the details. I did pick the $34.50 strike price. So relative to the current price of $34.90, I'm anticipating at least a 50-cent move towards the downside to be at or below $34.50 on or before June 17th. Now I did pick up 5 contracts. All 5 expire worthless in 9 days. And my average cost basis is $49 per contract. And as of the time of this recording, I'm down in the trade because these contracts are valued at around $43 per contract. And overall, I'm down $32.50. And if I click right here, here's the trade confirmation. So this morning, a minute after the market opened, I picked up 2 contracts when the premium was at $54. And then as the premium started dropping, I started scaling in. So at $48, I picked up 1. At $45, I picked up another. And then $44, I picked up 1 more, which was maybe 20 minutes ago, 20, 30 minutes ago. So that's the status of this position. So if I open it up, so right now my contracts are considered to be at the money. So everything, all the contracts here that's highlighted in purple on either side of this dashboard are considered in the money. So if price continues dropping, then the value of these contracts will increase. So it's going to go from $42 to somewhere around $60 to $91. It's all contingent on if price continues dropping over the next over the next 10 days. So that's the rationale and status of this trade. And as time progresses, I will go ahead and pause it for now, and I'll pick it up maybe end of the week or possibly early next week. So I'll be back. So today is Monday, June 13th. It's a little after 1 p.m. and status check on the XLF trade has price way below the local support level of 32.56, as well as price falling outside of the regression channel. And we can see that for 3 consecutive days, price has just dropped drastically. And as I had pointed out, again, going back to the 1-hour time frame, I was anticipating that price was going to fall outside of this channel, and it's just been a grind towards the downside, significant. And so if I look at it at the 4-hour time frame, right? So when I entered this position, price was still above or inside this channel right here. And I was fortunate enough to get involved in this position before this drop occurred. So we can see that price hit an all-time low of 31.44. When was this? This morning, pre-market. So considering, okay, so if I open up the trade tab, we can see that the option contracts are now designated ITM or in the money. And as of the time of this recording, XLF is trading at $2.73 approximately. And the trade is now up a little over $1,100, of which $350 was just from today's move. Now, considering that there's only 4 days remaining, and if there is a bounce, let's say price tries to run back up to 32.56 over the next 4 days or the rest of the week, then that's going to completely eat into the premium of these contracts. So things will speed up if price reverses. So I'm thinking about closing this trade out today at possibly $2.75 or $275, and just protect the premium. Again, even though there's 4 days, could there be further downside? I can't rule it out considering how the S&P 500 has been falling. But in any case, if there is an opportunity to re-enter a position, let's say it does run up to retest, then I'll look for another opportunity to write it right back down. If there's still that sell-off sentiment in the market. So what I'll do is, so here's the premium. So it's now at 273. So what I'll do is I'll send this to the chart. So now this is the 4-hour chart, or the chart for XLF, June 17, 34.5 put. So this is the contract, or the chart of my contracts. So if I open up Active Trader and change the order to 5, right? So if I place an order here to sell at 275, so I just got filled. So now my position is 0. I closed it out at 275. So that was a quick trade. So if I go back to XLF, I should be out of this position. Yep, so I have a 0 position, and considering I sold it at 275, overall net is $1,124 in the span of 3 days. I got into this back on June 8th, so not including Saturday and Sunday. This is about a 3-day trade. So as I mentioned, I will look for another opportunity if price does run up to take another short position via option contracts. If it does continue working its way towards the downside, that's fine. There's other setups I'm looking at. So until the next trade, I'll see you.